If you build it, they will come. Building roads, bridges, or electricity networks are crucial to a country's competitiveness. But 70% of global greenhouse gas emissions are created from these types of projects. This is unsustainable for the planet and investors. Build it green and they will come. Investing in a sustainable vision not only helps meet global climate goals, it also boosts economic growth and creates fairer societies. For example, introducing solar power to schools in Sudan and Tanzania saw primary school completion rates increase from less than 50% to almost 100%. And in the US, it's estimated 63 million full-time jobs depend on the quality and reliability of transport infrastructure. The coronavirus crisis has caused a health and economic emergency. But the challenge of the pandemic and the planet should be attacked simultaneously. The world needs up to $7 trillion a year to hit 2030 development and climate targets. And an enormous funding gap remains. One potential source is the $80 trillion in assets held by institutional investors. While just 1% are presently invested in infrastructure, some 90% plan to increase that. But for that money to be put to work, what's needed is data. Sustainability and ESG transparency are now embedded in the investment process, meaning more detail is demanded on how capital will be deployed. Where disclosure and data exist, it tends to drive higher levels of investment. Year to date, green and sustainability-linked loans have raked in $47 billion. Meanwhile, Chinese President Xi Jinping has insisted all Belt and Road projects will be open, green and clean in a bid to increase investor appetite. And it seems to be working. BRI-linked green bonds hit a record $34.2 billion in 2019, compared with just $5.2 billion in 2015. The Blue Dot network, that's backed by the US, Australia and Japan, hopes to serve as a globally recognized seal of approval for major infrastructure projects once it's up and running. What this does is increase the visibility for infrastructure financing globally. As the coronavirus crisis has shown, companies with ESG credentials generally fare better in the long run. And data is the starting point for driving clear and decisive action on shared global goals.